So in today's video, I want to talk about the four main types of entities that are in the US, and they are the sole proprietorship, the single member LLC, the S Corp, and then the multi-member LLC, which is a partnership in that form. We'll talk about all the taxes that are associated with each type of entity, nuances you want to know, and then if you decide to move forward with one of the entities, I want to tell you guys about the back end tax or the back end pay that you have to do to prepare this return, right? Whichever entity you decide to choose, hey, this is not really something that people talk about because, hey, I did the S corp election, I save $1,000, but then I have to pay $1,000 to prepare it on March 15th or April 15th, or if you go for extension, we'll talk about that too. But there all is a tax preparation fee that is associated with each entity, and depending on where you're at, it varies for every single person, and we'll talk about that because, like I said, you can apply these tax saving strategies depending on the entity that you're in, but it wouldn't make sense if, hey, tax preparation fee cancels everything out. And I'm really at net zero as far as tax saving wise. So I want you guys to be aware of that. We'll go right into the types of taxes that are associated with each entity. But before that, I want to talk about the taxes that are associated when you are just an employee, right? When if you guys had the opportunity or had the chance or had the bad experience of working a W-2 job, right? I want to tell you guys how those taxes are associated first, right? There's always the employee and the employer. Most likely, if you're working the W-2, then you're going to be the employee, right? And with that, when you work, weekly, bi-weekly, quarterly, monthly, you got paid every single that, schedule, whatever the case may be. There's typically some sort of withholdings that are associated when hey, it's that time where I get to get paid. Well, before you get to get paid, the IRS, the government, the state, they have to get paid first. And those taxes that are associated with are the federal income tax, Social Security and Medicare taxes. And then if you live in a state that also has state taxes, then, they'll pull out that money from that end. But today, since I live in Texas, that really isn't associated with me. But we'll still talk about it a little bit. But federally, depending on how much income you make for the month, then, you can adjust your withholdings. And then at the end of the year, hey, I'm in the 24, 32% tax bracket, whatnot. But the things that will remain the same is Social Security and Medicare taxes, right? When you are an employee, you have to pay 6.2% into Social Security. So regardless, $1,000 you get paid out, 6.2, of that is going to get paid into Social Security. And then Medicare, as the employee, you're going to have to be paying 1.45%. That totals out to 7.65% every single time you get paid when you are doing your withholdings. Obviously, if you're withholding more, then you're going to be paying more. If you're withholding less, then you're going to be paying less. But typically, as an employee, those are the taxes that are associated with just being a regular W-2. Okay. So now that you guys understand that and that you guys can, get an idea of what taxes are associated with anybody having a W-2, we're going to dive right into a spreadsheet that, I have talking about the four entities and how those taxes are associated with that. You should be able to see my screen now. And you can see right here, there's a lot of information going on, but we'll go through every single row, right? And, I'll dive deep into this. Now, keep in mind, guys, these are just rough estimates, all right? We're going off round numbers, and there's going to be a lot of things and nuances that I won't include inside of here because that's more the technical things. And when you actually prepare your return, you can talk to your tax preparer, and they'll give you the exact numbers of based on your situation, right? So again, as an employee, I just really want to touch on this really quick. As an employee, off of Social Security, you're going to be paying 6.2, and then as an employee on Medicare, you're going to pay 1.45, and that's how we came about to that 7.65 off of just Social Security and Medicare, those two things, right? And then obviously your federal taxes and your state. But right now we're going to talk about the sole proprietorship slash single member LLC. And you might be wondering, why is this slash? Like, aren't those two different types of entities? Well, actually, when you're filing your return, a sole proprietorship and a single member LLC are going to be on the same type of tax return, which is a Schedule C. Now, most people will argue that, hey, because of them being the same, the IRS will technically consider this as a disregarded entity. It's still an entity, but it's just going to be, merged together because they're, as a single member, you're going to be single. Sole proprietorship, it kind of makes sense for them to have it together. Okay. So we're going to give our, grounded numbers as far as how the business operated and what we came out to be a profit. So business revenue was about 200,000. Business expenses were about 50,000, and then obviously take that away, it's 150 in business profit. From here, that's where we get taxed. We don't get taxed on business revenue, we get taxed on business profit, right? Now these two says DNA, which is does not apply as far as reasonable compensation and distribution. We'll talk about this later because as a sole proprietorship or a single member LLC, this doesn't really apply to us. All the money that we are having as far as net income, we get taxed on that as far as the federal, Social Security, Medicare, and then state if it applies to us. Okay. So based on this alone, right, off of $150,000, again, when you are a sole proprietorship single member LLC, you are not only the employee, but you also are the employer. Now, that sounds crazy to some people. So, hey, I have to pay 7.65 as an employee, but then as the employer also, I have to pay another 7.65. So really, I'm paying 15.3% off of Social Security and Medicare alone. And for some people, this might be a huge shocker to them. This is something that, you really don't learn in school as far as, when to, become a business owner, for business class and whatnot. They really don't talk about this stuff, but because you're watching this video, hopefully that you're taking this away because this can be a huge shocker for you guys. 7.65 hitting into your profit margins can be substantial, right? That is, we're talking about so many different things, when you are a business and 7.65 is a huge margin, and then you have to add the employer and the employee side together, you're at 15.3%. Hey guys, like some people, when they hear this, it doesn't make sense for them to become an entrepreneur or a small business because of this tax right here. But these are just how the US system works, and we have to pay into these taxes. So off of Social Security alone, right, because you're the employee and the employer, 6.2 plus 6.2 is 12.4. So really, Social Security for you, you're gonna have to multiply 150,000 times 12.2, 12.4 is gonna be 18,600. So off of Social Security alone, that's where you're gonna be having to pay. And then if you take 150,000 times 2.9, that's what you come out to as far as Medicare. And then if you are going to add these together, Social Security and Medicare taxes, you're going to be paying roughly 222,950, $23,000 off of just 150,000 business profit. Again, this does not include your federal or state, but because we're going to the next column, which is the federal stuff. So off of this year alone, off of 150,000, I project calculator, and you can actually see right here off of 150,000 off of 2024's numbers, you're going to be paying about 29,043 in just federal taxes, which is insane. Now we're going to add these two together, so I'm just going to say 29,043 plus 22,950, and because I live in Texas, I don't have state taxes. So off of $150,000 in profit, I'm paying roughly a third of my business profit in taxes just in general. That are the taxes that are associated with a sole proprietorship and being a single member LLC. And then for the next thing is going to be the S Corp, which is the holy grail for some of you guys. And I think it's also the holy grail, and I'm going to touch on why it is too. So, the numbers as far as the business, revenue, expenses, and profit, they're going to stay the same. They're going to stay consistent just so that we don't get ourselves confused or anything like that. But one of the best things as far as being an S Corp is, hey, you get to determine what your reasonable compensation is. Now, I highly consider that you guys talk to your tax advisor as determining what is reasonable compensation because, this could be your business. We have to consider if you are married, what are additional other incomes that you have. Maybe you also have an actual W-2. This is a side income, and, your side income is doing great, but you don't want to give away or you don't want to quit your W-2 because there's health benefits. So there's a lot of things that we consider when we're determining reasonable compensation. But for this purpose, I said that reasonable compensation off of 150,000 was 60,000, and the distribution part is going to be 90,000. Now we're going to talk about reasonable compensation. Now, one of the many requirements when you are an S corp is you have to give yourself a reasonable compensation, and like I said, in this case it's 60,000, and the rest of it is going to be a distribution. Now distributions are essentially just you taking money out of the business account or just leaving it inside of the business account. Reasonable compensation is essentially your W-2 because you are an S corp. This is a corporation. You have to give yourself some sort of W-2, and because you are an owner, you're giving yourself 60,000. And this is how we determine these numbers here. Again, this 90,000 is distribution. This right here doesn't get taxed off of Social Security or Medicare, but it will get taxed off of federal and state taxes. It's a flow through entity. All of it's going to go down to your 1040, and it'll calculate as far as what you have to pay the other two taxes, not the Social Security and Medicare. Okay. Again, this can sit in your account or you can continue to take it out. But the money that we are giving ourselves a W-2, now we have to pay into the Social Security and Medicare because you're an employee. 60,000 times 6.2 is how we got 3720, and then 60,000 times 6.2 from the employer side, which is also you because that's your S corp, is going to be 3720, right? Same thing over here. We're going to take off of Medicare. We're going to take 60,000 times 1.45. We got $870, and then 60,000 times 1.45 from the employer side, again, which is your corporation entity, that it's going to be 870. And when you combine all this right here, you're going to be paying roughly $9,180 in self-employment and Medicare, well, in Social Security and Medicare taxes, which is also, this is going to be transformed to your payroll taxes. But that is essentially the tax savings when you are getting to become an S corp. Is, hey, rather than paying $22,000, I only have to pay $9,000. I'm getting, off of these numbers alone, like more than $10,000 in tax savings off of this strategy alone. That might make sense for you guys. And, like I said, it's important that you talk to your tax professional when determining, what type of entity structure is best for you. But this is just the rough numbers. And again, the numbers that kind of stay the same as far as, the business profit, the federally, you do have to pay that 29,000. And if we're doing off of this, whether determining, hey, should it make sense to be a LLC, a single member LLC, or an S corp, this is the tax savings that you can see with this alone. Okay. Now, partnership, right? When you are a partnership or a multi-member LLC, in this case, we're just going to say that in this business, there are two partners. And, obviously when you have more than two people, then, it can get a little more frisky and, dividing all the income. But in this example, we're just going to have two partners within this business. The number staying the same is business revenue, business expense, and business profit is 150,000. The exact same business we are including in a partner. And when you're a partnership, you have to you typically get paid as far as the distribution from the business. Nobody is getting on reasonable compensation, but you still have to have distribution to pay the Social Security and Medicare taxes. And if you guys can see right here, essentially what we are doing with this business in this partnership is it's almost split, and exact same thing as a single member LLC or sole proprietorship. It's literally split in half. Everything, like, hey, the partnership one or the partner one is paying 75,000, which is half of this. The Social Security that is associated with the multi-member LLC, it's roughly half. It actually is half of a single member LLC. You can see the numbers there is split. And if you add these two up, it's still going to come out to this 18,600 in Social Security taxes, right? This is the, one of the more beneficial sides is of, hey, the risk is, a lot less on, rather than one person, hey, it's spread evenly as far as the taxes between two people. And it's the exact same taxes for a single member LLC, Social Security, and Medicare wise. Okay. It's split in half. Federally, it's the exact same thing. We're going to split this in half, and off of, a $75,000 for Social Security and or for federal taxes, we're going to be paying about 11,553, and that's how we determine your federal taxes. Okay, so this right here is a spreadsheet that we have for our clients. It gives our projected amount as as far as hey, I made $100,000, so I'm going to max out the first tax bracket at 10%, max out the second one, even almost going up to maxing out the 22% right below it, and it gives you the total amounts of owed. It adds it up, and this is the total federal amount of taxes. Okay, this right here is a game changer for us. It saves a lot of time when we're doing the math for our clients. But also, again, I live in Texas, so I don't have any state income tax associated. But I'm gonna quickly go through this. I have a separate training, a separate video explaining more on, state taxes, and you guys can check that out. It's gonna be somewhere over here, but I'm gonna go really quick into it. So, there's gonna be some states that have no income tax. These are the ones listed. There's gonna be states with a flat income tax, meaning, hey, let's say we're going off of the numbers again that we used previously, $150,000. We're going to take $150,000 times maybe 5%, 4.95%, I believe, in Illinois. And, that determines our state income tax. And then there's going to be also states with a graduated or a progressive tax system, much like our federal tax system is tax bracket, you max it out, you go into the next one, you pay, obviously once you max this one out, hey, you pay 10% on 11,600, and then when you are maxing this out, you go to the next bracket, and then the difference between these two, if you max that out, you pay 12%. Some states, like the ones listed right here, the exact same way, that you guys can check out in the video that I included. So that is state taxes, and these are the taxes that are associated with being a single member LLC sole proprietorship, a S corp, or a multi-member LLC, which is also a partnership. I also want to add in that these are just rough estimates, okay? Again, these are estimates depending on, there are so many factors that we have to consider. Hey, as an S corp, you might be more reasonable, or I guess, more aggressive. You want to pay more into reasonable compensation, or hey, there's multiple partners, more than two, and we have to kind of determine what, numbers that are associated with that, okay? Your tax preparer, they're going to do all this for you. And I also want to say that this does not include your deduction for you're paying into self-employment taxes, okay? So really, 15.3%, it's really around 14% that you're paying. So it's a small amount, but it's still, every percentage counts, every single dollar counts, right? And then this also does not include QBID, which is the qualified business income deduction. You usually get a 20% deduction off of your business profit. So off of this right here, you can take that times 0.20, and you'll have to pay less in federal taxes. Same thing right here as far as an S corp. Rather than taking a 20% deduction off of here, you're going to be taking a 20% deduction off of here and then adding it with this, and then that's how you're going to determine your federal income taxes as far as paying into that. Same thing with a multi-member LLC, your partnership, right? Every single partner is going to have to pay into that self-employment tax, but then there's also the federal taxes. You get the QBID, you get 20% off per se, and then you're gonna have to pay less into the federal taxes part. Okay, again, these numbers don't include that, but this is just this is to get a good understanding of what types of taxes are associated with each type of entity, and you guys should be able to move forward with what decision you want to do as far as an entity structure. Now, I want to tell you guys about something that I've built dear to my heart, and I'm continuing to build, is my power tax bundle. Now, just off of this alone, some people that, they understand this now, they want to know, hey, what else can I do to pay less in taxes? Because, I already have a business. I want to keep as much money in my pocket. I want to fund the business more. I want to give my team members a raise. I want to take that vacation. I want to buy that new car, new house, whatnot. So what are some things that I can do to lower my tax liability? And I built the Power Tax Bundle that is able to walk you through, hey, because you're a new business or you're a growing business, hey, you need to understand these things. We have a business checklist that we include inside of here, the Power 5, that, every single business, regardless of what you do, being content creator, coach, small business trucker, crypto enthusiast, day trader, whatnot, you can start to take advantage of the Power 5. These are the staple deductions that, can create additional deductions of anywhere from 5,000, well, relatively $1,000 up to $10,000 in additional deductions within your business. We are going to be talking about a couple different things. We also include spreadsheets, and that you can keep track of everything and what you're doing, your cell phone, your vehicle. We also have a bookkeeping sheet if you don't have anybody to do your bookkeeping for you and you want to be more lean, efficient, and operate the business. We also include that for you to utilize for your business, and it's super cool. People absolutely love the bookkeeping sheet. And we also have some additional trainings in here, what you need to do to protect your business, getting organized, additional resources, and then you also get a 30-minute consultation to, go over anything that you have regarding this power tax bundle when you are going through it. Okay. At this time right now, it is priced what you are clicking on the screen when you click down below, you can go ahead, check it out. It's priced at what it is right now. But as we continue to add more education and more of the advanced strategies, because this is just one strategy, guys. Well, actually, this is multiple strategy in itself, as far as you getting to understand what are the taxes associated with your entities. And if you go ahead to make that S Corp election, hey, there's so many additional strategies that, we haven't even talked about with the S Corp in combination of saving yourself off of self-employment taxes, off of right here, right? We determined that you're saving $10,000, but there are so many additional deductions that you're able to get access to. And when we start to add that education inside of here, we're slowly going to, increase the price, because that is going to reflect the amount of value that we're able to provide, and the amount of tax savings that you could be potentially exposed to once you purchase this. So this is going to be readily available down the link below. And this is what it is right now. We also have a bonus training in here, and I will talk about that here in a moment. But before that, I want to talk about the last thing that I mentioned was the price ranges for each type of entity when you decide to file. So again, the three entities that we have are the sole proprietorship, the S Corp, the multi-member LLC, and then obviously, again, we decided that we already come to conclusion that, your single member LLCs and then your sole proprietorship are grouped together. So we will touch up on that right now. Here are the price ranges for every single type of entity if you decide to move forward. All right. So sole proprietorship and single member LLC, this is going to vary between $300 to $800 just to file this Schedule C. And then if you are an S Corp, depending on the complexity of it, the 1120S, you're going to have to pay anywhere from 800, and I've seen upwards of 1,500 for a 1120S. Okay. A multi-member LLC partnership, which is a 1065, is going to vary right around the same thing as far as your S Corp. Your 1120S is going to be 800 to 1,500. So if you are deciding to do tax planning and you decide to go with one of these entities other than your sole proprietorship, once you get a good ballpark number of what type of tax savings you are, hey, I make this S Corp election, I'm saving 3,000. I'm talking to my tax preparer, he's charging me $1,000. Now I'm left with $2,000, right? If we're using a $3,000 profit of tax savings from the S Corp, $1,000 to prepare the return, we're getting a net savings really of $2,000 because we're making this S Corp election. So it's good to be aware of what type of entity that you're choosing, and then the tax preparation part that is associated with it in the following year. Okay. And again, this can get very complicated. This can go all the way up to $2,000 to $3,000, depending on what you have within your S corp. We are talking about equipment, shareholders, right? Partner, same thing. If you have more than one partner, then it can get very complex. Okay, everybody has to get paid. Everybody has to include in the deductions and whatnot. So that is the training that I put together right here for you guys to get a better understanding of the sole props, single member LLC, S corp, partnership, multi-member LLC. I hope you guys enjoy this as much as I did. And I also, like I said, I want to give you guys a training, a 44-minute training that, I share with everyone, and how we save all of our clients at least $10,000 in taxes. I'm going to include that. It's going to be the very next video. You guys can check it out. It's completely free. And, it's going to go into a little bit more about this S Corp thing. And then we're also going to talk about, the framework that we utilize so that our clients can receive as much savings as possible, and include their personal goals into what they're already doing with their business, and really, really save money on the tax part within their business. Okay. So we'll see you guys, and bless.